Four Nigerian banks had 89.94 trillion naira in deposits, yet 90% of their loan went to corporate companies. Four Nigerian banks collected 89.94 trillion naira from their customers in 2025. Salaries, savings, school fees, house rent, everything ordinary Nigerians trusted their banks to hold. And when it came to time to lend money back out, nearly 90% of it went to oil and gas companies, manufacturers, and telecom operators. The four banks are Access Holdings, GT Banks, UBA, and First Bank, and the numbers inside their annual report are striking. At Access Bank, retail customers provided 28% of deposits but received only 13.7% of loans. At UBA, everyday Nigerians supplied 41% of deposits but received just 8.4% of credit. At First Bank, for every 1 naira borrowed to a retail customer, 18 naira went to a corporate borrower. Across all these banks, for every 1 naira borrowed to an individual Nigerian, 10 naira went to a corporation. Now, the banks are not doing this out of malice or wickedness. A large oil company with billions in assets is easier to borrow money and is easier to recover from than an individual with informal income. That is risk management. That is not wickedness in any way. But here's what that reasoning produces. Nigeria's consumer credit market stands at just $2.1 billion for a country of over 250 million people. Kenya, with 1/4 of Nigeria's population, has a consumer credit of $3.70 billion. That gap is being filled by fintechs. Moneypoint disbursed over 1 trillion naira in loan to small business owners in 2025 alone. The FCCPC has approved 505 digital lenders since 2022. So the question here is not whether Nigerian banks are profitable. They clearly are. The question is whether a banking system that sends 90% of credit to corporation can genuinely be called a system that serves Nigeria.